Okay, folks, welcome to the week ahead commentary, or I should say Sunday Night Futures Live, 6 p.m. Eastern Standard Time, every Sunday night. And I want to kick it off tonight with a couple of words about Charlie Kirk, and God bless him, God bless his family, and what a tragedy. I'd have a little bit of a different take on the resolution of these problems. I'm frankly tired of the whack-a-mole of these incidents, whether it's the pandemic, what have you. It's got to come to an end. And I was talking to my wife about this tragedy, absolute tragedy, and I encouraged her to and my children too to look. It's kind of like the opposite of the old saying, uh, "Don't look at the forest, look at the trees." In this instance here, I would say, don't look at the trees, look at the forest. Meaning, think high level. What is causing this? And one of the problems that are out there is the fact that you've had the propaganda machine ever since 9/11 turn inward, and it was codified into uh, kind of perpetual law uh, with the Smith Modernization Act being repealed by the Obama administration back in 2012, and that act, the Smith Modernization Act, was put into effect in 1947, and that was to put reins on the CIA and the any other intelligence agencies that we have, that they can do their dirty tricks, but they need to do them overseas. You cannot turn the propaganda machine on your own people. And I think that after 9/11, you had the Patriot Act, which completely they set up these secret tribunals, the FISA courts, which went after President Trump in secret. And then you have the repeal of the Smith Modernization Act, which allowed the CIA and whatever other NSA national security apparatus to hone inward and attack our own people, creating, I'm not going to call him a monster. I'm calling it, in a way, he's a victim. Not that I feel bad for him at all. I feel bad for his family, the shooter of Charlie Kirk. But you have a whole generation of these people out there, and this really needs to stop. There are many more out there like him that are just waiting to strike. So those are my thoughts on Charlie Kirk and how do we get from where we're at now to a better place. And again, many prayers to the Kirk family. And he's bigger now in death than he was ever going to be in life. That's for sure. So shout out there. And thanks for everybody for being here. I don't want to make this a dire show, but I did want to just share my thoughts about the Kirk assassination. That's exactly what it was, an assassination, and it's tragedy. But I have a different take on it. Again, it's that macro view, that higher level view of how we fix it. It's not going to be gun control. It's not going to be putting this guy away for 100 years. That's not going to solve the problem. The problem's a lot bigger than one 22-year-old in Utah. Let's get to the futures action. Okay, so we have the NASDAQ gapping up here. Oh, we have a new contract. All right, this is not a new, sorry. I'm saying, wow, we're gapping up here, yet we're down. This is a new contract. That's why you're seeing the futures the way they're at. But relative to the close on Friday, where clearly the Q's trading yet? No, not yet. Not yet. So it kind of makes it difficult to analyze the futures action, at least for me anyway. But do we have higher prices now than we did on Friday? The answer is absolutely yes. Let's take a look at the E-minis. We're going to have this probably with all of these contracts for the equity markets tonight. E-minis. Yeah, we have a new contract there. Gapping up. So new daily higher highs and new weekly higher highs relative to the Friday close. Let's say hello to folks. Mr. Sean, welcome. Oh, and by the way, George, welcome. We're finally streaming live on Rumble. So if you folks on Rumble are watching, please like, subscribe. You know the deal. Rumble made it very, very difficult for a while to hook up their API, their interface with my software provider. And finally, it's up and running. So we are streaming on Rumble. And Instagram, we were supposed to have been streaming on, but we couldn't get the streaming key. So we should be streaming on Instagram as well right now. So the folks on Instagram, like, subscribe, you know the deal. So welcome, and let's say hello to the rest of the folks out there. Eric, welcome. Mr. Jeff, welcome. Thank you, sir. Appreciate that. Investors want yield. When the recession hits, there will be a fight. Yeah, so it's a very, very good point. So we know that we're going to have a Fed rate cut this week. It's only going to be a quarter basis point cut. You know, you're going to have the talking heads on CNBC. They're going to be saying, "Oh my God, will they cut?" Yeah, they're going to cut. Will it be 50 basis points? Will it be a quarter basis point? It's going to be a quarter basis point. How do we know? Because we have the same tools they do. It's called the Fed Watch tool. Anybody that you see on CNBC right now that is posing the question of, will the Fed cut rates? All they want is drama. All they want is your eyeballs. They're cutting rates. They're going to cut by a quarter basis point. That's it. End of story. Mr. Tim, thanks for being bold and talking. Yeah, my pleasure. I don't like it to be about politics, but frankly, I don't think this is about politics. I think Charlie Kirk's passing was a shock to a lot of people, a tragedy. And I think that we're all tired of the manipulation that's out there. And oddly enough, or not so oddly enough, you had a vote on the day that Charlie was assassinated about the release of the Epstein files in Congress, and that was voted down. It wasn't just pure Republican, Democrat. They all got together, uniparty nonsense, and they voted it down. If we want to heal as a country, if we can find one thing, left, right, to agree upon, those files need to get made public. You had about 3 million people marching in London against the government yesterday. I think it's about time that we do the same here and demand the release of those files. Those people are the puppet masters. They need to go to prison and at least go to trial if they're guilty. We don't want anybody to be tried for no reason. I may not like Bill Gates, but if he didn't do anything wrong, we certainly don't want him warfared, or what do they call it? Lawfare. We don't want lawfare against somebody out of simply not liking them. TF Hatter, welcome. Welcome very much. Okay. You're watching SWBI and OLN. I don't like the reason why at all. Now that's funny. That's a t-shirt. I like this stock, but I don't know. I don't like my reason. Hey, Lee, welcome. Okay. So we have the E-minis that are clearly up right now. Maybe against fair value on the Friday close, they were showing is down. Let's take a look at the RTY, the small caps. New contract here, gapping up. So already we have new daily higher highs on the equity markets. EMD, the mid caps, they're gapping up, new contract. So a strong open here ahead of a Fed announcement. And this would be the first cut in 9 months by the Federal Reserve. Yes, 9 months. but it will be 1 year ago this month that they did that 50 basis point rate cut. Let's check in with the US dollar. US dollar trading up. Yes, it's trading up relative to the close on Friday, but down at the open here versus the Friday after hours trade. Sticking with currencies, let's take a look at the British pound. Not that it's a big player anymore. Remember, this is the world's reserve currency at one point in time before World War II. Euro down versus the dollar, but this is really, look at the inverted head and shoulder setup here. Left shoulder, head, right shoulder, only a 15-minute chart, but I think the euro is going to move up higher. Japanese yen, it's just been consolidating of late, not doing much at all. Let's check in with crypto. I think that Bitcoin, I looked at the chart a few minutes ago. I think that we're going to move towards record highs. Do we break out and close above them? Not quite sure, but I think that's where we're going. We're now opening down here on Bitcoin by 0.69%. Let's check in with XRP. XRP gapping down here 1.62%. Let's check the weekly chart on XRP. We own both of these, dollar cost averaging. I still like the weekly chart. We had a really, really good week last week. So a little bit of a pullback this evening. Let's check in with gold. Gold opening down here. Let's face it, gold is pretty frothy right now. Do I think it could move up higher? Sure. Do I think that we're going to get a sell the news event on gold? I think it's quite possible. Depending upon the Fed's statement or the press conference afterwards, we could get a sell-off on gold. We can get a sell-off on equities. But we'll talk more about the equity component in a moment, what's going on here. Silver opening down about 1/3 of a percentage point. So these names have just been on a tear of late. Let's look at oil. Oil gapped up at the open this evening, but has since reversed. We rallied up to $63 the barrel, and we are now trading lower. It looks like we may break support here. Let's set up an alert. Okay. Natural gas. Natural gas opening up over a 0.5 percentage point. We opened a position on natural gas, very small, using the leverage product Boyle. Was it early last week? I think it was maybe the week before. Late. Yeah. We've been in it for about a week. So natural gas trading up. This is not a lot of volatility for natural gas. Usually this is trading up a percentage point. You can still see here on a 4-hour chart that we're at some resistance. We backed off of it. So the short-term trend here on natural gas remains unchanged, and that's to the downside. So I would be careful. I wouldn't go adding more here, not until we began to break out and take out the highs of the after hours on Thursday, and that's at around $3.06. Sticking with commodities for a second, I want to go to the the weekly chart on live cattle. We're just off of all-time highs. Okay, so cattle coming in here a little bit. Corn prices last week had a really, really good week. Nice breakout. We put in new higher highs. So it looks like it's game on for corn. Here again, soybeans, another chart that's looking really good on a weekly chart. We have higher lows. We start breaking out above 1062, the bushel, we're going up higher. Wheat, higher lows. Good stuff here. These are pretty good setups to be watching. I wouldn't be a buyer yet of the futures anyway, but wheat looking really good, corn looking really good, soybeans looking okay. Hey, Paul. Welcome. Any thoughts on a change in the benchmark for GDX? The benchmark. Do you mean directional? Because the benchmark would be you gotta clarify that for me a little bit better. Because you have the gold mining index. Is that what you're referencing? Because that could be a mixture of junior miners and senior miners. GDX are the senior miners. So just if you could just clarify that, I'll answer your question. All right, let's continue on here. I think we covered the futures action fairly well. Why do I feel like I missed something? We covered commodities. Let's see if we're settling down here on the NASDAQ. New weekly higher highs. Okay. All right. So let's talk about what's going on this week. It's going to be a big week. We have the Empire State Manufacturing Index coming in on Monday. That's not really going to move the markets unless it's a horrific number. Tuesday, retail sales, that can move the market. You have some manufacturing data coming out on Tuesday. Wednesday, housing starts. But the real pimp mac daddy of them all is going to be the FOMC rate decision on Friday. Now, again, folks, you're going to have CNBC, Bulls and Bears, Fox Business, all these guys, Bloomberg. Will they cut? Will they won't cut? Listen, they're using the same information I am. September, 100% probability of an ease. End of statement. End of statement. The question is, do equities sell off on the news? You see, the problem is with the investor that trades off of the news off of CNBC is that they're watching these guys. They believe what they have to say. It's actually in question as to whether or not they're going to cut rates, when in reality, there's no question. Everybody knows they're going to cut rates. So while you have the amateur money providing liquidity for the big money, well, why wouldn't the big money sell into that pool of liquidity because they have big positions? Why wouldn't they do that? So I think that's probably what's going to happen this Wednesday, is that we're going to get a sell the news event. The Schiller PE ratio is one of the reasons why I think that we're going to get a sell the news event. We closed out the week last week at 39.56, the second highest in history relative to the dot-com bubble. In terms of the Buffett indicator, forget about the dot-com bubble. We remain strongly overvalued, and we are well beyond. Here's the dot-com bubble back here. We're so far beyond the dot-com bubble. It's ridiculous. Fitch downgrades the debt of France. Why? Because they have a lot of debt. But guess what? It's less debt than us, and Fitch has already downgraded our debt. Euro about to move up higher. They're ignoring this. Coffee prices, which conveniently have been left out of the CPI, the Consumer Price Index. They took it out in 2024 because they didn't want to skew the data. They took it out, but coffee prices are moving up higher. This is inflation. So you have the Federal Reserve, which is going to cut interest rates for the first time in 9 months, yet inflation is on the rise, debt is on the rise. This is going to be really, really interesting how this all plays out. So coffee prices moving up. Producer price profit margins. The PPI, Producer Price Index, margins fell 1.7% month over month. This is from the tariffs, to the lowest since April and marking the largest decline since 2024. This is also the second largest monthly drop in at least 6 years. So we have this news coming out about margins getting compressed. What does that do to earnings moving forward? It doesn't help earnings, and we're already at frothy levels. And these earnings that come out next quarter need to be perfect, absolutely perfect. No room for error. So on that, where do I think the markets are going in the short term? I think they go up. With all this bad news, I think they go up because that's the path of least resistance. Earnings this week, Cracker Barrel should be interesting. I'll tell you that. I wouldn't normally talk about it, but this one should be interesting. I want to be on that conference call on Thursday after the bell. This is actually the end of earnings season. FedEx reports, and it's always an interesting report. It's because it's a pulse check on the market. UPS should be interesting here. UPS is at support, and if FedEx delivers on upbeat guidance, then I think we get a rally in UPS. We'll talk about that chart in a moment. Lastly, the Great Divide. Just before U.S. household net worth jumped by $7.1 trillion in 3 months. This is from the April lows. Consumer expectations hit record lows. In early 2025, U.S. consumers' expectations about their financial situation over the next 12 months dropped to the lowest level on record. Think about that. So this includes the inflationary days at the very end of the 1980s. It includes the dot-com bubble. It includes the financial crisis. It includes COVID. We are down below those levels. Look at that. Yet, do I believe that equities are going to move up higher? Yes, I do. Now, here's a chart of the triple Qs. I currently have a short position on the Qs, which I might have to lighten up on in the coming days. We already have new weekly higher highs. We have the Fed decision. Ideally, we get to sell the news event. And on that pullback, I may lighten up on those short positions because this market just seems to want to continue up higher. Now, ultimately, I think that this is not going to end well for the triple Qs. Why? It's because even though the triple Qs, which is a basket of 100 or 101 stocks, made new all-time highs last week and the week before and the week before that and the week before that, the problem is this. You have 100 stocks. This chart here is the number of NASDAQ 100 stocks trading above their 50-day moving average. There are only 45 of those 100 stocks that are trading above their 50-day moving average, which anybody that's a technician knows is bearish. You don't want to go buying stocks unless they're deeply oversold and cheap below the 50-day moving averages. You just don't want to do it. So the structure of the triple Qs is very, very weak, very, very fragile. And, if you get an SEC letter to NVIDIA, if you get an analyst note about NVIDIA, these names could go rolling over because you only have 7 names driving the triple Qs up higher. So it's not going to take much to knock this market over. So beware of the structure of the triple Qs. It looks all great on this chart, when in reality, this chart here is just horrifically bad for the triple Qs. And also, when you take a look at volatility, last week, we broke out on the 10th. We did a retest on the 11th, and then on the 12th, another one with a bullish reversal bar. This could be a successful retest. Now, if we close out the week with a 20 handle on the VIX, then I may hold on to those shorts. If we close above 25, then I'm confident that we're probably going to see a 30 handle on the VIX, and the equity should see at least a 5 to 8% pullback from these current frothy levels. And the other reason why that may happen, and I'm not saying this is all going to happen in 1 week, is that when you take a look at the seasonality of, this is Trend Spider, by the way, link below on YouTube, link above on Facebook and Twitter, 35% discount, CON35, take advantage of it. Rumble, I don't know if I have a link there. So my apologies. And Instagram too. Sorry about that. We got to get that up there. Anyway, this coming week is one of the weakest weeks of the year. In fact, tied for third as one of the weakest weeks for the triple Qs. So this is why I believe that we're probably going to trade up into Wednesday. Then we're probably going to get a sell the news event. So when they cut rates, which they're going to do, I have already showed you that. There's no great shock here. Don't go buying stocks. Let them pull back. Let them find support. Let them consolidate. And if they don't break trend, then you ride it up for another move up higher. T.Z. Burton. How about? I'm very sad about Charlie. Yeah, he was really just a good guy. Just a good guy. A tragedy, absolute tragedy. Indicated. Oh, you're talking about the GDX and supplement the prospectus. I'll be honest with you. I don't go into the prospectus of GDX all that much. I don't even own GDX. I own the GDXJ, which is the junior miners, and NUGT, which is a leverage product of the GDX. So I use those two proxies along with SILJ for the silver miners, and they're treating us really, really well. So I'm not exact. I don't want to comment on something I really don't know anything about the proxy for GDX or the benchmark for GDX. All right, so some interesting data here. This is from Global Markets Investor, and I validated the accuracy of this. So U.S. goods producing sector are already in recession. Manufacturing, construction, transportation. These are really the most critical elements of our economy because you're producing stuff, right, to export. That's good. They're experiencing recession-like economic conditions. And here they are. Manufacturing clearly in recession. Negative growth. Transportation, same deal. Mining, same deal. Agriculture, same deal. Utilities, flat. I think that they're going to begin to outperform. They do really, really well with the declining interest rate environment, plus the demand for energy with the data centers is only going up. So utilities I'm going to be looking at very, very closely. So the reason I point this out is that when you take a look at this chart here, it says manufacturing is in recession, but I want to leave this off with a bit of positive news, and that's this. When you take a look at this is a ratio chart. So here I took the Dow Jones U.S. Manufacturing Index, and I compared it to the performance of the S&P 500 month over month. So this is a monthly chart. And you can see that we were talking about this a while ago. We were in a downtrend channel. We gap lower, double bottom setup, and now we have broken out on a relative basis. What does that mean? Let's talk about it. So what that means here is that we had I'll get this right eventually. There we go. Okay, so let's save this. So for the longest time, you saw the Dow Jones U.S. Manufacturing Index declining relative to the S&P 500 for years. This has been going on, literally years. Now, all of a sudden, we gap lower. This is a capitulation, W formation. And here's the pivot point. The center of that W formation, we broke out above it. To me, this looks like we are in a new manufacturing potential bull market relative to the S&P 500. Now, right now, manufacturing is a relatively small component of the S&P 500. It'll grow larger over the course of time if manufacturing grows, because the S&P 500, the SPY, is market cap weighted. So right now you have Google, Amazon, all those big names are taking a big chunk of the performance out of the S&P 500, whereas the manufacturing sector is only a small component. But as it grows, it becomes more dominant in that index. But right now, this is looking very, very good for manufacturing, despite the current known news. This is the market sending you a signal that there could be a bit of a manufacturing renaissance already underway. And you're seeing smart money already rotate into it. In fact, let's take out the S&P 500 and just take a look at the chart, standalone. And you can see, look at this. This is a monthly chart. This is no joke. A rip your face off rally. We bottomed out back here in January of 2024. And since the lows on this index, we have rallied 171%. Think about it. So something's going on here in manufacturing in the United States. Now, I don't know what components are in this bucket, but I'm going to find out. Talon, welcome. God bless America. God bless the Kirk family. Yes, sir. Thank you very much. Thank you very much, Talon. Appreciate that. Price weighted versus market cap weight. Yeah, it matters, right? Because as a matter of fact, I want to go back to the Qs for a moment. I want to talk about, that's a great point you're bringing up, Junior. When you take a look at the triple Qs, so on a daily chart on Friday, the triple Qs closed up 0.44%. Remember, we're looking at structure, right? The number of stocks that are driving that index up higher. It's only 45 of them that are trading above the 50-day moving average. And most of those names are not making all-time highs. They're just trading above their 50-day moving average. So when you go back to the Qs and you take a look and say, okay, what's the equal weighted doing? Because this is a cap-weighted ETF, just like the SPY is. So what is the bucket doing on an equal weighted basis? Well, let's get curious. QQQ was up 0.44% on Friday. The equal weighted bucket was down on Friday. That's a variance of almost 0.60% on a week. The QQEW was up 0.95%. Now, the QQQ was up 1.84%. That's about double the equal weighted. So this clearly shows you have too few names driving the triple Qs up higher and the S&P 500. Let's talk about the seasonality of the Qs for the month of September. Historically, one of the weaker months for the triple Qs. But as it stands right now, the Qs on the month are looking really, really good. We're about halfway through the month. New all-time record highs, up 4.5% on the month, looking really good. But as I mentioned earlier, beware. We're just halfway through the month. And on the week, this is one of the weaker weeks out of the year. So be very, very careful of chasing this market. And the week following is just a coin flip of which way we trade. S&P 500. On the month, S&P 500 seasonality, up 0.53%. It's equal to the month of June and the months of January and February as being one of the weaker months out of the year. In terms of weekly, I haven't looked at this yet. Oh, the coming week is tied for the weakest week out of the year for the S&P 500. So I think this is what these seasonality charts imply is that generally post-Fed announcement, we get a sell the news event in the S&P 500 and the triple Qs. And given the frothy price action here, I think there's a very, very good chance that it happens. Now, I want to talk about UPS for a moment. I did a video on UPS. As a matter of fact, I was going through the charts that we have gone over this past year, and it was pretty interesting. So this past year, I did videos on, and these were bullish videos on Rocket Lab. That was the first one. We did that back here in April. That is up 197% since I did the video. So we went over that chart. These are all on YouTube. I did all my analysis are on YouTube. On Rocket Lab was April the 21st. Sohu was April the 26th. And that's up 25% since I did that video. UNH, we all know about this. We bought it here. I did the video on May 17th, and we rode the rally up here, stopped out of half of our position right before it broke 300, went into the sell-off, re-entered, and now this is up since I did the video. It's up 33% since May the 17th. We remain long. App Lovin'. App Lovin', I did this video on July the 19th, and this stock is up 62% since I did that video. And lastly is UPS. I did this video on the 29th of August. And I really haven't revisited it since, but I thought this is a good time. First off, let's talk about seasonality here. Remember, we have FedEx coming up this week. Not a great time of year. This is a coin flip. 50-50 or 55-45 odds are not good odds to me. These are good odds, nearly 80%. This is great odds. So the time to really get heavy into this stock would generally be in October even more so December, January, dollar cost averaging a position. But looking at this chart right here, right now, I'll tell you, this looks pretty darn good because we hit the support level I was looking for last week. So we're probably going to begin bull operations on UPS. I'm going to try to hold off until after FedEx's earnings. Maybe I'll scratch CH before, but we are at critical support. We do have a lot of overhead supply here. You got a dollar cost average into this. Here's the daily view. We're struggling to break above $89 per share. So UPS looking very interesting as to me as a long-term investment. Because don't forget what's going to happen. The end result here. Let's go back to this chart for a moment. The Fed Watch tool. All right, they have Fed rate cuts going out as far as the eye could see, 100%, 100%, 100%. All right, so it's not going to be enough. Jobs are going like this. Jobless claims are going up. Unemployment, non-farm payrolls are going like this. And it's not a good scenario for the jobs market. So at some point in time, they're going to need to goose the market. That means the Federal Reserve will be in there buying debt. They're currently selling debt. They will have to begin buying because nobody else wants it. And that is going to goose up the stock market. We'll probably go to all-time highs again after a sell-off. And UPS should participate. You want to buy these stocks now. This stock is cheap. And I mean on valuation basis, not purely technical. We look at valuation and technicals. Right now, this stock is looking really, really good. All right, so we have a few to go over here as far as chart requests. For those folks that did not enter your symbols, head on over. Use this link here. It's free. And enter your symbols right here. Right there. Like Gay has it. Lester. Who else do we have here? We got a few to go over. I know Larry's got one as well. So let's get to it. Let me go to Larry's first before I forget. Chart request for CVI. CVI. So it looks like the last time we went over this chart, I put this line here, and that was your breakout. So we can retire this line because clearly the stock is broken out of this downtrend. The macro view is that we have yet to break out of this multi-year consolidation. We're nearing the upper quartile of this trading range. If you erase this up here and you just put your lines up here, there's your upper band. And there's your lower band. So this is your trading range going back, wow, to 2010. Wow. And the reason why I say wow is that when this thing unleashes, it's going to be a rip your face off rally. That's for sure. The problem is that oil, I'm not sure what space is this in. Is this a utility or is this a CVR? Oh, it's rivet and machine. So Maybe this is not the right one. Oh, I typed in supposed to be CVI. Energy and exploration. Okay, so you have oil, which is weak right now. It's not going to help these names. Energy stocks, especially the exploration stocks and production stocks, highly correlated to oil. And oil is just cheap. And it's very expensive for US-based stocks, Canadian stocks, to make a profit relative to the Saudis, the Venezuelans, when you have oil this cheap. So right now, I'm not seeing a screaming reason, unlike back here, to go buying the stock. The time to have bought it was that breakout of that down highlighted. Right now, you're going to be buying it into resistance. So if you're thinking about adding more here or opening a position, I wouldn't do it because you're getting rejected at the upper band of the downtrend channel. When does my tune change? If we close above 34.60 per share, that gets me interested because we'll be above these volume shelves. We'll be above a lot of sellers. If it comes on volume, I think that we could proceed up higher. The big canary in the coal mine is going to be this range here, and it is truly a range. You could say here is the high end of the range. Let's say it's there, 44.50 per share. You break out above that mark, there's a very good chance that you go moving up higher. Especially the proxy here would be if you have oil moving up higher and this stock breaking out above $45 a share, 44.50 per share, it's a buy because it's breaking out of a multi-year time frame. And the saying, as I like to say, is that the longer the consolidation, the greater the validation of any breakout. So you have a lot of people here that don't expect much. They're asleep at the wheel. Nobody's paying attention to the stock. When it breaks out, they still won't be paying attention to it. A breakout here is a time to nibble. A breakout here is a time to be very, very aggressive if oil is moving up. That ensures that the breakout is healthy, unlike back here in 2013. So that's my take on CVI. What happened to all my requests? I lost them. I actually closed out my requests. Okay, Larry, we got you. Let's go over Sean, Coinbase. Coinbase is highly correlated to Bitcoin. We have a nice reversal month. There's your support level. I think that Bitcoin's going up higher. Even though we're opening down, I think it's going up higher. And we have not put in new monthly lower lows. We are holding the lows of last month. We were down. We're now up by over 7.5% on the month. What we're looking for is a breakout. Let's go to a weekly view. I think this could be bought, to be honest with you. I like the setup. On a weekly time frame, we have already broken out. Any pullback, right now Bitcoin is down. If you get a drop in Coinbase tomorrow morning to around 294 in that ballpark, give or take a buck, I'd be a buyer. I think that this is looking pretty good, and it'll probably move up higher. Volume could have been a little bit better last week, but okay. You don't have a lot of overhead supply here, as noted by the lack of volume shelves. So it's looking good. We're above the Fibonacci's. Clear blue skies right now. Automated trend lines. We closed last week above not one resistance level, but two. Even if we pull back to 313 per share to 306.50, I'm a buyer. I think it goes up higher. Again, folks, these are the automated trend lines. Invaluable. I'm sorry, highly valuable, not invaluable. Highly valuable. Get a 35% discount code. Link below YouTube, link above on Facebook, and Twitter, TLT. So TLT has had a heck of a run here. We have what you want, and that is a higher low. Would I buy here? No. Why? We've rallied so far so fast that I can't chase it here. I would want to look for a retracement on TLT down to around, maybe fill the gap at 88.66 on a big extreme pullback, maybe down to 88 to 87.28 per share. That would be the filling of this gap here. And it could happen. Remember, the bond market is going to be paying very, very close attention to not the Fed rate cut. It's going to be all about his tone moving forward during the press conference. So it's all about the press conference, nothing about the cut. We're getting a cut. The question is, how does the bond market react to his comments moving forward? So on any pullback, I'd be a buyer of TLT. I think that we've turned the corner here, and that in all probability, we're going to move up higher. The only fly in the ointment for TLT is if he cuts rates and the bond market does exactly what happened this time last year. If you go back to 2024, September 2024, you remember that Powell did a 50 basis point rate cut. What did long-term bonds do? Let's go back in time. September 2024. Here. So if you have the TLT, which is the ETF for the 20-year bond, it traded down. That means yields went up. So normally when the Fed cuts short-term rates, usually the bond market will say, okay, we'll take rates down along with them. This time last year, they didn't do that. And right now, long-term bond yields are higher than where they were a year ago, even though they cut one full basis point. So that's a little bit of a concern to me, that type of behavior. And I would, before I bought this, I would want to wait until after the Fed announcement, see how the bond market behaves. If they take bond yields up higher, which they did immediately after that first Fed rate cut a year ago, then I would avoid the TLT, because what the bond market is telling you is that nobody wants our bonds. They think we're crazy, and that the only reason why they're going to rally is that they expect that the Federal Reserve is going to ramp up the money printing machine, and they're going to begin buying the debt, just like they did after the financial crisis, just like they did during COVID, just like they did in 2023 with the regional bank crisis for a while. They'll start buying debt, they'll bail out the market, and then it's off to the races again. But this time, they got to go a lot bigger than they did ever before with the bond buying to get the same outcome. The law of diminishing returns with the Federal Reserve and their bond buying, there's greater expectation for more bond buying than there was the prior round. It's just the way it is. They're going to have to go big. So if he alludes to that after or during the press conference, that they may begin buying longer term debt, then you want to be an aggressive buyer of the TLT, because that means longer term bond yields come down. If he alludes, if he waffles in any way, like we're still worried about inflation, we doubt we're going to go in for a rate cut in, they have an October meeting? Yes, they have an October meeting. We're going to be data dependent into October. If he waffles at all and this drops down to 70%, then you could see the bond yield move up because he's too dovish. Sorry, too hawkish. Boyle. Okay, so we kind of already went over It's not good to use the chart of Boyle. I'm gonna in the spirit of going over Boyle, we're gonna go over UNG because it's a better proxy. Here, take a look at this chart. UNG looks nothing like in the past few weeks the chart of Boyle. Nothing like it. So it's better to go with UNG, which frankly right now looks like a potential bear flag setup. So am I chomping at the bit to go adding more to Boyle? No. If they gap us up to new weekly higher highs this coming week, meaning at the open they gap up natural gas prices and they keep them up, then it's a different story. Then it'll become a little bit more bullish. But right now, you take a look at Boyle in the futures market, not Boyle, natural gas. On the futures market, we're gaining here. We're holding the gains. The question is, when we gap up on Monday morning, do they fade it? We don't know. So ideally, we get a nice gap up on Monday. It holds it. We close above, ideally, the highs of last week on Boyle at, what were the highs of last week? Highs of last week were 31.62. Daily view. All right, so on a daily chart, what we're looking for here is a higher low. Right? We broke out here on the 29th. I thought we were going to get followed through here. This is why I nibbled on it. It didn't happen. So what we want, ideally, is to be able to say, I did not want to draw that line. Oh, you know what? Keep it. Ideally, you want to be able to say, okay, we now have a higher low. And now what we're looking for is a rally above 31.71 and a close there. If we get that, that means that that downtrend is now over. And now we're putting in higher lows and higher highs. So would I go buying more right now? No. We scratched the itch. We bought a little bit. If we have to take a loss on it, we take a loss on it. Do I think we're going to take a loss on it? Probably not. But we're open-minded. So I wouldn't go adding to it. I would buy more on a close above 31.71 per share. NVO for Lester. All right. So this is a European stock. Novo Nordisk. I like it. We bottomed out in August with a bullish reversal bar on the month of August. Where we bottomed out was a supply zone right here, right where we found support in September of 2022. Before that, it was January of 22. Before that, it was a launching pad in October of 2021, sending us up to 147.37. So right now, you're in a risky spot where you are hoping that this is the first leg of a W formation. Maybe it is, maybe it's not. The stock remains in a downtrend. You can't ignore it. It's fact. Can't fight it. We're putting in lower highs, lower lows. So when do I get bullish here on Novo Nordisk? When we get a breakout, let's go to the weekly chart. When we get a breakout and we have our pullback and a higher low, which is something like we have now, on a weekly time frame, but not the monthly time frame. You're in a nice little triangle formation. This is a recovery play. I'm sure there's not a big short interest here. I would be looking at this as a long-term accumulation stock, assuming that it's cheap on a price to book, price to sales, price to earnings ratio. And I would begin bull operations by dollar cost averaging. I would not be aggressive buyer here. You show me a monthly chart similar to what we had back here. Right now, you're here. Meaning, we rallied, we pulled back, we had a higher low, and then it was off to the races. We could have just as easily failed and took out those lows back here in September of 2022. We didn't do it. We went up higher. So I'll be looking for a repeat of that formation yet again. It's more probable than improbable that that's what's going to happen here. So it's going to take a few months for this to all play out. But it's setting up nicely. It's at historical support. Let's check out seasonality. Let's try that again. Seasonality. September's a pretty good month. October's a coin flip. But the next few months, a couple of months, November, December, are seasonally very strong months for the stock. So it's a pretty good time to begin bull operations, especially if you get a breakout and a close above 57.27 per share. I would be a bull on the stock. Watch for a rally up to these resistance levels and then a sell-off. And that's where on the monthly chart, you'll get a rally, and then you're going to be looking for a pullback, and then a higher low, and then you want to see a breakout above whatever highs we put in this time around. And then you'd be more aggressive with your buying because now you have a nice sound base from which you're buying Novo Nordisk into, rather than hoping that this is a V-shaped recovery, which is probably not going to be. They rarely are. Indexes, yes. Stocks, usually no. And that's it, folks. Everybody have an awesome remainder of your weekend and have a profitable trading week. I will talk to you soon. Be well.